Look, I mean, we're at 85 degrees and the evidence is clear that we're trapped. Again, look at two simple examples of how trapped we are, that there is no easy way out, that there's no solution. Powell's war on inflation, which he clearly lost. Again, not even getting into how that we measure inflation is an open lie in the US. The CPI scale is an open lie. We're really at about 13%, using the same scale that Volcker used in the 1980s. So US inflation is much higher than it was. Powell could not beat inflation. He tried in 22 and 23 to raise rates to fight inflation. And all he did was create a banking crisis and a market crisis. Because when he raised rates, the bond market tanked. When the bond market tanked, bond yields went up. And since bond yields are the cost of debt, we hit what was called fiscal dominance, that by trying to fight inflation by raising rates, he actually made Uncle Sam's bar tab more expensive. So he had to pivot to lower rates. He couldn't even win the war on inflation. That's how out of ammunition the Fed really is. It's completely broken. Well, when Trump announced Liberation Day, what didn't make the headlines, announced all these harsh tariffs, and he changed his mind within hours. There was a reversal of that. In the meantime, the markets lost 10 trillion in market cap just on the announcement. And then got 4 trillion back when Trump kind of became more dovish. But the real reason Trump couldn't really push those tariffs wasn't the art of the deal or pushing really hard and then pulling back or a negotiation tactic or strong arming, carry a big stick, talk softly. The reason Trump pulled back is what no one saw is the next day after Liberation Day at the Treasury auctions, no one showed up. It was crickets. No one was buying U.S. Treasuries, that once sacred cow, that once essential safe haven when markets are volatile. In fact, the U.S. Treasuries went down in price and yields went up on Liberation Day. Gold did not go down very far. In fact, it went up. In other words, what was supposed to happen didn't happen. And why Trump and Bassett had to pivot and be a little more dovish on the tariffs, at least for 90 days, is because there was no one showing up at the Treasury auctions, no one buying U.S. Treasuries. In fact, there was a dumping of U.S. Treasuries during that April crisis, that peak moment of volatility. And again, so what I'm saying is, just like Powell couldn't fight inflation because his bond market wouldn't let him, Trump can't really exercise or prosecute a trade war without creating tremendous volatility in the bond market, because the bond market is everything and no one wants to talk about it. And when Uncle Sam sees rising yields, that makes it impossible for him to pay his own bar tab. So the Fed and the White House have to keep those yields down. And since no one's buying them naturally, and since GDP isn't high enough and tax receipts can't pay for them, that just means at some point we're going to have to print more money. I mean, I think, Bernanke, I think it was in 4 years, 2.5 trillion, and then Powell in 18 months, 5 trillion. And now the Congressional Budget Office is thinking for us to keep yields controlled, we're probably looking at 10 trillion more. So the point is, our only solution to a debt crisis is more debt, paid for with literally synthetic money created out of nowhere, which is highly inflationary. Whether we're trying to fight a war on inflation or puff our chest with a tariff war, every time we try to do anything disruptive, it sends the bond markets into a tizzy and yields go up. And I'll just end with this. Rising yields, so everyone knows this, are shark fins to a debt-soaked nation. It's like blood in the water, and you see those shark fins coming. Uncle Sam, corporate America, and the man on the street cannot afford rising yields. So we have to always pull back or give up because our debt levels are so high that anything we do to try and fix them naturally just causes yields to spike and the cost of debt to get higher. So we're damned if we do, damned if we don't. That's why I said Papa Smurf, Mother Teresa, Albert Einstein, no one's going to solve this debt crisis overnight. And we're finding all kinds of ways to distract ourselves from that. But that's the bottom line. They're running out of envelope. I mean, let's think about that. Trump is really literally ripping apart long-standing trade partnerships. And foreigners own about 30% of current outstanding debt. Now, we could see a foreign dumping, which was once a foreign dumping of U.S. Treasuries, which was once unthinkable. Again, this was the Tier 1 World Reserve safe haven asset, the risk-free return of the U.S. 10-year. I call it return-free risk based on actual honest inflation. The 10-year is useless. So we could see this unthinkable thing could happen. Liberation Day, we certainly saw it. But then you have to look again at the bathroom mirror of the U.S. Fed or the U.S. White House, the U.S. Congress, and our deficits. After the great financial crisis in 2008, we were running annual deficits, which is the delta between tax receipts and spending, at about $500 billion. Then during the COVID hysteria, those annual deficits went to about $1 trillion. And this year, we're looking at annual deficits about $2 trillion. And again, I don't want to get too wonky into the bond market, but there's a thing called the term premium, which is the return or the reward you get for going long U.S. Treasuries for the 10-year, the 20-year, the 30-year. And the 50-year average for that term premium was usually 1.5%. Well, as of today, the term premium for going long U.S. Treasuries is 0%. And the only way to get us back to that 50-year average of 1.5% term premium would have to mean we'd have to bring the yield up to about 6%. that would actually force bond prices down even more, maybe 20%, 30% more, and yields go up even higher. So again, the only solution is to fill that delta with mouse click money. And then comes, after that fails, bazooka money fails and the currency is reduced and inflation is undeniable, regardless of how they report it. Then we get what Katerina Georgieva, the IMF, warned in 2020, and what the Basel III regs are already signaling. Then we get central bank digital currency, programmable, trackable, civil liberties gone. And then we get into a whole brave new world of a global reset. And that's a whole other rabbit hole of awful. And yet, even the IMF, though, and the BIS is going to have some kind of coverage ratio on this beast, this central bank digital currency. They said it in 2020. That's going to be physical gold. That's why Basel III brought in physical gold as a tier 1 asset, made more coverage ratio for Basel, more segregated gold. That's why the IMF telegraphed in 2022 that physical gold has to be part of the CBDC to make it credible. After there's a reset, after the deck chairs in the Titanic are sunk and they have to reshuffle something new, it will be this new CBDC, which I said 5 years ago is a train we can't stop. And regardless of whether you like it or not, gold is going to be emerging more and more as a central part of that. It's the good part of a bad idea, but it's coming. And that's why gold is rising in price exponentially since the last time we spoke, $750 higher. Why? Because central banks are buying it, because they trust it more than the U.S. Treasury and the U.S. 10-year and more than the U.S. dollar. That's a quantifiable fact. Before we weaponized the U.S. dollar in whatever you think of Putin, whatever you think of Zelensky, that's another rabbit hole. But when we weaponized the U.S. dollar, which Robert Triffin said not to do, which John Maynard Keynes said never to do, which Barack Obama said never to do, when we weaponized U.S. world reserve currency and the FX reserves of a major power like Russia in 2022, central banks went from buying about 118 tons of gold a year to 290 tons today. So central banks are saying, you know what? That U.S. Treasury, in addition to being debt-soaked, is weaponized. The trust and love for that U.S. Treasury is not the same. And so there is less demand for that U.S. Treasury, a real problem for Uncle Sam and the Trump White House. And that's why we're seeing all this craziness. But again, this is not a gold bug case, folks. Look at the flows. Look at the yields. This is history happening right now. Big watershed moments, as Neil talked about, and as you know, and as all of us who've studied history and math know, this is nothing new. It's a desperate time, and it'll get more difficult before it gets better. And let's just hope it's not a military component to that nonsense that we're already in. But I can't predict that. No one can. Well, that's a great question. I mean, think about it as we head towards the end of that horrific war, right? World War II. And again, whether you're in France, Switzerland, Germany, you go to any cemetery, certainly in France where I live or in Germany where I travel, it's appalling, the sections for the war dead. But after that horrific war, where most of the average age was less than 20 years old, a whole generation was basically effaced. And that was 2 decades after World War I. Which was another horrific moment in humankind. But what we did have in 1944, Bretton Woods, and what we did have with the Marshall Plan was some great ideas. After World War II, rather than just seek revenge on Japan or revenge on Germany and its citizens, this great General Marshall, brilliant man like Eisenhower, not like Patton or MacArthur, who were brilliant in other ways, but not necessarily astute. But you had these brilliant ideas of a gold-backed U.S. dollar leading the world as the world reserve currency, which came out of Bretton Woods. You had the Marshall Plan, where we were going to try to cooperate to make the world more cooperative, certainly led by the dollar, but there was a sense of we're in this together. We don't want another Versailles moment where we upset Germany so much that we create space for demagoguery and desperation. We didn't want to repeat the mistakes of thinking only about ourselves and punishing the bad guy. We wanted to cooperate. That was the mood of the Marshall Plan. That was the mood of the IMF. That was the intent. And that was certainly the intent of having a sound money-based world reserve currency backed by gold. Well, fast forward to 2025, we welched on the Bretton Woods, which didn't even make it 30 years from 1944 to 1971. We just welched. If you were looking for a dollar that was dreaming of gold, well, Nixon got rid of that overnight. That was the end of constitutional money. That was the end of the Bretton Woods. And the Marshall Plan idea of cooperation in the IMF as the idea of helping other countries come back to life. If you read John Perkins' The Confessions of an Economic Hitman, all the IMF did was give usurious loans, unpayable loans, and effectively colonize developing countries from their natural resources under the name of friendly loans. So that cooperative spirit of Marshall and the Marshall Plan and the IMF's optics of being cooperative actually created more and more wealth inequality, more and more financial colonization of the developing economies, and more hegemony for the U.S. for a short period. It was absolutely the opposite of cooperation. And now under Trump, love him or hate him, it's every man for himself, it's America first, it's quote-unquote protectionism. Protecting what? Our industry's been offshore to China for years. He's not protecting American industries, he's forcing labor back in, which again, some can applaud. But this idea of cooperation resolution, this idea of peaceful resolution, this idea of third-party, governmental organizations helping the world, whether it was NATO or whether it was the League of Nations before then, it always collapses because of human nature. Every man for himself, my country first, no permanent friends, no permanent interests, just my interests. No permanent friends or enemies, just my interests. What Kissinger said, to be a friend, is fatal to America, because America really is about America. It always was. There was a shining star. There was a period after World War II where we were really trying to cooperate. What we have now is a world where all of those cooperative models, all of that organization, and all of the corruption at the IMF and the BIS and the World Bank and the ECB and the EU and Brussels, these bureaucrats, these fonctionnaires, all of that is clearly failing because we've lost that cooperative John Nash beautiful mind idea of cooperation makes the world better to it's every man for himself on the Titanic now, grab your own lifeboats and let's make gold part of this equation. We're also going to centralize the currencies and digitalize them, tokenize them, and basically make you a slave to our system where you have no freedom, no autonomy, and everything's programmable. That's what's coming. So it's a long answer to your way of saying those ideals that came out of World War II didn't last very long. And what we have today is the exact opposite of those ideals. We're having more of a Versailles-like post-America than we have a Marshall Plan. It's very, very different now.